Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2024, and we're diving into the latest earnings report from Roper Technologies. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Roper Technologies has just released their third quarter results, and there's a lot to unpack, from revenue growth to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. Roper Technologies reported a revenue of $1.76 billion for the third quarter, marking a 13% increase. John, can you elaborate on this growth?
Absolutely. The revenue growth is driven by a combination of organic growth at 4% and strategic acquisitions contributing 9%. This indicates a robust performance across their portfolio of technology businesses.
And what about profitability?
Roper's adjusted DEPS increased by 7% to $4.62, and net earnings rose by 6% to $368 million. This reflects their effective cost management and operational efficiencies, despite the competitive pressures in the market.
Operational efficiencies and future outlook. Roper has also shown impressive operational efficiencies. Can you tell us more about their EBITDA and cash flow performance?
Sure. Adjusted EBITDA grew by 10% to $717 million, and operating cash flow was $755 million, a 17% increase. This strong cash flow performance supports their ability to invest in future growth and acquisitions.
Speaking of future growth, what is Roper's outlook for the rest of the year?
Roper has increased their full-year guidance, expecting adjusted DEPS to be between $18.21 and $18.25. They anticipate total revenue growth of over 13%, driven by their expanding recurring revenue base and strong demand for their solutions.
Strategic acquisitions and market position. Roper recently completed the acquisition of Transact Campus. How does this fit into their strategic goals?
The acquisition of Transact Campus, which is now combined with their Seaboard business, enhances Roper's vertical software offerings. This move aligns with their strategy to expand in high-quality verticals and create value for shareholders.
And how does Roper plan to leverage this acquisition?
Roper is well-positioned to execute its disciplined M&A strategy with significant firepower for future acquisitions. They have a robust pipeline and are focused on expanding their recurring revenue base, which is crucial for long-term stability and growth.
Risks and challenges. Every company faces challenges. What are some of the risks Roper is dealing with?
Roper's high debt level, at $7.68 billion, is a concern, especially in a rising interest rate environment. They also face competitive pressures and market risks, including economic conditions and potential impacts from their minority investments in Indicor and Certinia.
How is Roper addressing these challenges?
Roper is focusing on operational efficiencies and strategic acquisitions to mitigate these risks. Their strong cash flow and disciplined capital deployment strategy are key to managing debt and sustaining growth.
Key takeaways. In summary, Roper Technologies has delivered a strong third quarter with significant revenue and earnings growth. Their strategic acquisitions and operational efficiencies position them well for future success. John, any final thoughts?
Roper's performance is impressive, and their increased guidance reflects confidence in their business model. However, investors should keep an eye on their debt levels and market conditions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Roper's performance in the comments below.